Hey, what's up everybody? Zach here with another video. Let's go over the daily report. My portfolio is only up $1,000 today, which is like 0.1% from yesterday. That's not all very much. Looks like mostly tech pulled back a lot. Let's see. Mostly, let's change. My SOXL, which I actually made a video focused on yesterday, pulled back a decent amount, so I think it's a great time to buy some, as well as a lot of the ARK funds pulled back. I see ARKK and ARKG, which is an interesting buy. I will probably make a video on the different ARK invest funds tomorrow. But finally, the THCX bounced back up, so all is well in the THCX universe. Alright, and well, AMC went up an insane amount yesterday, which is what we had called. I expected it to go up once I saw it trending all over the internet, and sure enough, I didn't expect it to go up 78% yesterday, and most of that was in after hours trading. But anyways, it did. So congratulations if you took our advice and entered into a long call. Or just bought a bunch of shares of AMC. Congrats to anybody that made money. SBE is still in our buy zone, but it is bouncing. So let's go ahead and take a look at that really quick. As you can see, it bounced off of our buy zone, which was right around here, and it's heading back up to, I think, around $50. So it's a good buy. It did pull back a little bit, you see, on the day candle. But I still think that's going to be an interesting buy. GameStop is up in a crazy amount. It's above $200 now. Congratulations to anybody making a ton of money on that. I see you. And Solo is another one that is up a decent amount that we were talking about recently. This EV company. So it touched a gray star buy zone, just the top of it. Looks like we were playing that a little bit too conservatively, but that is not a problem. Still, you can buy 100 shares of this and start selling covered calls with me next week. Once it pulls back next week, I'll probably buy the 100 shares, because this one, the option premiums are pretty interesting still. I do see this making a push towards $10 or $11. CCIV is in my buy zone now from yesterday. I wrote about this, and so is Reggie. Both are going to be good to buy. They will be making a push up, and especially CCIV is interesting. So it pulled back a little bit, but I definitely see it pushing up because this is a very strong trend line right here. It's going to have a very strong support on that, and once we're playing the rumors and the news, and once the announcements come, or closer to the date, then we will be taking our profits on that. But anyways, let's go ahead and add. So I've only got 2 for the watch list today. Not much is going on. We're still watching the ones that we had before, but I want to go ahead and officially add Lee, which I read an article yesterday in China about, because I can speak and read Chinese, and I read an article, and it was saying that Lee was going to outperform NIO, Xiaopeng, and BYD, which is hard to believe, but I have seen the Lee SUVs. I think they're called Lee 1. I've seen them in real life, and they're actually very nice. It kind of reminds me of a classy Lincoln SUV, but all electric, and they're very nice actually. I personally like the Lees better than the NIO ES6s or ES8s. In Xiaopeng, they don't have a SUV yet, but their sedans are very nice. BYD, I don't like them at all, but they're very cheap, and a lot of the Uber of China, which is called Didi, bunch of the cheap ones are BYDs. But anyways, so that's interesting. It's gaining more traction, and a lot of more people are talking about this now. Lee, I mean, in China. And the target price I set this was 44 because it is in a nice parallel trend channel, and there's no reason for it to be pulling back right now. I think it's going to keep going a lot higher. So if it does pull back a little bit more um, into this buy zone, I think it's a very, very good opportunity to get in on the action before a push towards 44. And it's been up till 44, 46 before. So I don't see any problem with it holding this if it stays in the in our channel. So go ahead and start dollar cost averaging right now on the way down to this support. There's no guarantee it's going to hit the support, and I usually play pretty conservatively. I don't really like taking a lot of risks, but I think this is going to be excellent if it does hit our support. But like I said, go ahead and start getting some now. If you're waiting for a nice option play, I would probably wait a little bit longer to see if it does hit that support. Time risk is a 3. I don't see this as risky because I've seen these cars in real life. And then the time frame is 1 to 2 months. I think you can easily hit it if you look at the support of what it's been bouncing up and down through this channel so far. I think you just drag out the time. I think it'll probably be about 1 to 2 months. Really, the next EV push, it'll probably bounce up there quicker, like right here. And then the last one is SOXX. I also was speaking about this one yesterday in my video of my own portfolio. I don't have any SOXX right now for my long-term holds, but I have SOXL, the 3X version. I would have SOXX, but I was switching some things around before I moved over to Webull and just decided to keep the 3X version of it. But as far as volume, this one would be better to make an option play on. So if you're interested in doing that, or just holding it long term, I think is interesting. But these shares are trading for around $400 right now. So I think doing a option spread, I think a call spread, I think that would be interesting. It could be a cheaper option to get into these options, or even just get some dated naked calls. Could be good, but if I wanted to go ahead and show you guys what I'm seeing on this, let's go ahead and move over to this. All right, so as you can see, what I'm looking at, this is since the coronavirus low, it is up a bunch, and it is playing within our channel right here, and then up here towards, this was last September, and then this peak was last December. So since then, it's bouncing back and forth, and since around Halloween, because there was that one dip right before that led up to Halloween. It was leading up to the election, but since then, it is even more in an upward trend than it has been. And right now, it has broken this, and I think it's pulling back. And now it's at a discount. It's down 1.5% today. So I think this is a really good time to buy it. I'm going to be watching, if you want to make an option play on this, watch what it does tomorrow at open. See if it's going to break this. And this is not a very strong trend line. It's a weaker one. But if it holds it, I think it's going to keep going up till here until it starts getting closer to the stronger one. So that's why I put the target right there. That's around 466, 467. Once it gets around 465, if I had an option, I would be thinking about taking profits on it. And if I had a long-term position and just buying the shares, then I would reevaluate around 465. But I do think it's going to keep pushing towards that because I don't see the semiconductor ETFs slowing down anytime soon. They've always been good to me. I mean, you can just look since the corona. Oops. They've always been very good. And even further out, we can see these literally are just on a boom right now. But even before that, you can see it just goes up. This semiconductor industry is a very good one to be in. And this was the 2008 crash. But since then, it's been going up. I mean, 2015 it pulled back a little bit, and I guess that's 2018, the mini crash. But I think we already had this crash for the corona. It's going up. I think it will eventually move up towards this target in a few more weeks. My time frame is 7 to 10 weeks. I don't see any problem with that. Unless obviously I put the warning for the entire market pulls back, then that's always something to keep in mind, and that's just going to change everything that we're talking about, because we cannot control when the market pulls back, and it is inevitable. It will eventually pull back, so don't panic if that happens. Just see it as a buying opportunity, and around these times, don't take as many risky positions, I would say, for options. But if you're a buy and hold kind of guy, then it's no problem. All right, one thing I promised you guys is to go over selling puts. So let's go ahead and take a look at this one. There was someone that reached out to me yesterday to go over selling puts. So let's go ahead and look at THCX and how to sell a put, a covered put. Okay, let's change this up a little bit. All right, so THCX is coming back. Just a little bit, but it is up today, 3.5–4% from after hours. So let's go ahead and look at these options, because let's draw some trend lines. This is heading in the upward direction, as we can see. It might be pulling back a little bit, so we could put a buy zone there, but I definitely think this is going to make an upward push. So let's go ahead and look at the options. Selling puts. So make sure we're on puts, and let's say 24 days till expiration. So that's almost a month. I would usually recommend doing about a month or 2 weeks if we have the option to do that as well. But so let's take a look at this. So if it does, which I expect it to pull back a little bit more into the buy zone, and we'll get lucky if that happens. So this buy zone is around $16, let's say. Oops. $16. So go back to the options page and then say the $16 strike is right here. So let's go ahead and click on that. And this is a put. Make sure you're on put and sell the put. So right now we set our limit price at around 70 cents per share. And also the last it went for was 79, so we could always raise it. And keep in mind, this is going to change tomorrow at open, but let's just keep it at 70 right now. That's on the low side because that was the bid, the current bid. But you can set the limit orders for whatever you want. Usually I would set it in the middle. But anyway, so here we are. THCX, a strike of $16, expiration in 24 days. It is a put. We're selling it in quantity 1. And limit price is like we said before, and then we can say when it's going to cancel this order if it doesn't execute. So it's at the end of this day, or its GTC is good till canceled. So then we would need to manually come in and cancel it. I usually do a day and then reevaluate, unless I'm buying something for long term, just buying the common stocks. And then I would just do good till canceled if I really want to hold it long term. But since this is an option, it's always recommended to do it cancel at the end of the day if it doesn't execute. So we're going to get a credit of $70 if it executes at our 70 price, because remember it's 70 cents per share, and that one contract is 100 shares. So that's 0.70 times 100 is $70. So just for doing this, just for selling this put, we would get the credit of $70. This is the opposite of selling the covered call. So once we get the credit of $70, if we will get assigned if current price is $17.36. Actually, it's $17.50 in after hours. Now, if that pulls back to our $16 strike price, that's when we get assigned. So we need to buy 100 shares of THCX if it pulls back to $16. Now, in order to execute this, we need to have enough money, cash in our account that we can buy the 100 shares of THCX at $16. So 16 strike price times 100, it would be $1,600. So if we had $1,600 in our account here, which we do, and this is a cheaper one, that's why I recommend doing it. If you've got $1,600, you can sell this put. You're going to get $70 no matter what. As soon as you execute this order, you will get the you will get the credit of $70. Now, if this pulls back, you're going to need to, it will automatically get assigned $16 and we will buy our 100 shares of THCX. Now, we don't mind that because we just got a good deal. And if we're looking at the chart, I think maybe it will pull back to $16. Maybe it'll bounce on the trend line before it comes up the next time. So that's okay with us. You know, if we want to sell the covered call, which eventually we want to sell the covered call because we're bullish and we want to own shares. We want to own our 100 shares. So this is why I'm letting you guys know. You have two choices. You can just go ahead and buy the 100 shares at $17.50. That's the current market price. We can just go ahead and set a limit order at whatever we want and just go ahead and buy the 100 shares outright. And then later we can sell the covered calls. But there's another choice. We can sell a put. And if it hits our strike, we're going to get the 100. We're going to have to buy the 100 shares anyways, and it went down. But there's always a chance that it's not going to hit our strike. So maybe you just want to buy. If you really want the 100 shares, maybe just go ahead and buy, set a limit order, and just buy the 100 shares outright. But if you want to do the wheel strategy, this is what we would do. We would start by selling a put. Let's just say $16, or we could do even $17 if we don't think it's going to pull back that much. Okay, so $17, sell a put, we get a credit of, well, since our limit price is at $1.15, we get a credit of $115. And then if tomorrow it pulled back to 17, we're going to get assigned, and we would have to have $1,700 because the strike is $17 in our account to buy the 100 shares. And now that we would have our 100 shares, no matter if we just buy them or we sell the put, we have our 100 shares. And then we will go over to calls. And once we're over at calls, let's go look at the chart. What do we think is going to happen? Well, let's say it goes to $20. We could try selling the covered call around $20, let's just say a month away or 2 weeks away. Doesn't matter. Whatever you guys feel comfortable with. If you want to, if you don't mind selling the 100 shares and getting assigned, then you can go at $20. And you see if we sold it, we'd get the premium of $70. And then if it ran up to 20, we're going to make money on the way up when our shares appreciate from $17 to $20. Because remember, we sold the put, we got assigned at $17, we bought them at $17, and then we turn around and go ahead and sell the covered call. We sell the covered call. If it hits our $20, the $20 strike, we might have to sell the 100 shares. But that's okay because we're collecting these premiums. And then once we sold it, then we're going to go ahead and do the exact same thing, sell a put again, and wait until we get assigned. And you keep selling the put. If you don't get assigned, then you just keep selling it. And then once you get assigned, sell the covered call. So as you can see, it's in a cycle. That's why people call it the wheel strategy or the triple income. Triple income comes from the three ways to make money on this is one, you get the premium, you collect the premiums. Two is if the underlying runs up to your strike because you're holding the 100 shares, so those 100 shares ideally are going to appreciate. And three, any dividends while you're holding it. And usually the dividends on a short period of time are not going to be that much. I usually don't even look at it unless we're talking about 1,000, 2,000 shares or something like that, which is possible because these guys, this stock THCX is not all that expensive, and you can get a cheaper one around $2-3 per share. You could get a decent amount of them. Just watch the volume on that. But nevertheless, this is the wheel. To summarize, you have cash in your account. You sell a put. Wait until the stock drops into to your strike price. You get assigned 100 shares, and then you go ahead and turn around and sell a covered call against your 100 shares. You collect your premium again, and then if it goes up to your strike price, then you will get assigned and you'll be forced to sell the 100 shares. And that's okay because you just go ahead and take the cash in your account and start over by selling a covered put. And that's how you do it, guys. It's not that complicated if you take a look at it. The Webull interface is more complicated than Robinhood, for example, but I like it because it's laid out. Once you get used to it, it's nice. There's a lot more things going on. And keep in mind, Webull is doing a free 4 stock right now if you sign up and deposit $100 using my link. That also helps me out a little bit. I'll get a couple shares too of whatever you guys get. And right now is the time to do it if you're thinking about moving on from Robinhood or if you just want to use the same broker that I'm using, so the interface is the same, if you guys are following along. But now's a good time to do it because there's a chance to get a Facebook stock. They're giving away 4,000 shares of Facebook, and Facebook is valued at $270 or something like that. So now's the time to do it. I posted a video. I spun the little Weeble wheel. I posted it on Twitter, so you guys can go ahead and check it out. But they are doing this promotion, so I'll go ahead and drop that link in the description. And make sure to follow me on Twitter for the live trades. Don't forget, I'm posting the live trades next week once my Weeble is approved for margin, which I can't trade until that happens. Then I'll be posting a lot more live trades. But for now, I'm posting a lot of ideas and trades for you guys to do while I sit on the sidelines. And then, of course, go ahead and hit the like button, subscribe to my YouTube. That's always important for the algorithm. I hope that you guys share this video to people that have the same questions as you. And please leave a comment on my YouTube or Twitter of what you guys want to see in the next video. Just go ahead and any questions you might have, go ahead and leave that. I'll make a video on it, or just go ahead and DM me on Twitter or whatever you prefer, or also Reddit too. I'm active on Reddit. Go ahead and DM me there and ask me any questions. While we're still a small channel, and you guys can go ahead and ask me any questions you want for now. And hopefully we grow together, you know, not just these channels and my Twitter, but also our community, and also our account balances will grow too. But we've been making a lot of good calls so far, so I hope you guys are following along. I see some of you guys posting the trades that you followed on Twitter and sending me a lot of messages saying that you have done these trades and make like 30-40% really quickly. But nevertheless, guys, I'll see you on the other side, and stay safe out there. Peace.